Daily Fiscal Pulse for the 20th of August, 2026. We're working with Thursday's settled data today, not real-time figures. Let's start by zooming out to the bigger picture. Equities and market movements are the dominant story right now. You're seeing headlines like how one Silicon Valley firm is seizing an opportunity from Premier League Soccer's gambling ad, driving sentiment and clearly influencing price action. Headlines matter, sure, but the flows are what really tell the story. Let's dig into those. The net fiscal transfer for this session came in at $14.6 billion. Tax receipts drove that number, contributing $4.9 billion to the total. Nothing jumps out as extraordinary when you look at it straightforward. The futures market tells a somewhat different narrative though. ES closed at 7,665, which keeps us above the 20-day moving average sitting at 7,658. Over the past 20 days, we've seen a range of about 493 points. Despite fiscal headwinds, price is managing to hold its ground. Pull back further and the acceleration pattern becomes apparent. Government spending is averaging $21.2 billion per day over the last 5 days. That's notably higher than the 20-day average of $14.2 billion. More cash is flowing through the system toward households and into markets as a result. The year-over-year picture reinforces this. Fiscal year-to-date spending stands at $1,614.4 billion, roughly 4% lower than the same stretch last year. That reduction in fiscal support does matter when you're thinking about overall market liquidity. From a positioning lens, the fiscal backdrop isn't tilting the scales one way or the other. Our conditions gauge is at -21, but you need to look at the full context. We've encountered this setup plenty of times, and historically the S&P has averaged around positive 0.8% over the following month. Even with softer liquidity conditions, markets don't move in lockstep with liquidity. They can and frequently do push higher regardless. One thing worth noting on positioning: leveraged funds keep adding to long exposure while margin debt has climbed to the 96th percentile. That's elevated territory. In the past, readings like that have functioned more as a caution than a bullish signal. There are some scheduled flows on the horizon that could alter the picture. The 26th of August brings the SSA payment cycle, the fourth Wednesday of the month, which typically affects near-term flow dynamics. The following major Treasury coupon interest payment window arrives around the 15th of August. We're not getting a clear fiscal signal in either direction at the moment. Scheduled flows in the days ahead will be the deciding factor. That's where our focus stays.